Every bank in the United States can now legally offer Bitcoin and other cryptocurrency services. Yes, every single one. This is a massive shift, and it changes everything. Welcome back to Journey to XRP. I hope you're having a great day. Today is Monday, the first full week of January, and whether markets feel quiet or not, something huge just happened behind the scenes. Let's start with the moment that set everything in motion: the Federal Reserve. Jerome Powell himself went on CNBC and confirmed something most people completely missed. He stated that U.S. banks are allowed to offer Bitcoin and crypto services as long as they properly manage the risks. The Fed's role, he explained, is not to block innovation, but to ensure banks can safely serve crypto customers. He made it clear they do not want banks turning away lawful crypto users. Pause for a second and think about that. This isn't about small regional banks or crypto-friendly startups anymore. This applies to every major bank: Bank of America, Wells Fargo, JP Morgan, and more. The same institutions that spent years calling crypto a scam are now preparing to enter the space, and they're moving fast. This is no longer speculation. This is official policy. Institutional adoption is no longer a question of if. Now the only question is how fast. And this is exactly why positioning matters. Smart money always moves before the headlines hit mainstream media. That's why early positioning creates generational wealth, quietly at first, and then all at once. Now, let's talk about Bank of America. Here's something most people don't realize. Bank of America holds more blockchain-related patents than any bank in the world. Over 300 patents, many directly linked to Bitcoin and blockchain infrastructure. That's not curiosity, that's preparation. Patents take years and millions of dollars. Banks don't file them unless they expect massive long-term returns. And remember, Bank of America is a Ripple partner. While retail investors were distracted by noise and memes, these institutions were laying foundations. XRP is already being integrated into cross-border payment systems, and Ripple's relationships make the bigger picture clearer every day. This isn't accidental, it's strategic. And the momentum doesn't stop there. On January 5th, Bank of America officially allowed its wealth advisors to recommend crypto investments to clients. Read that again. Wealth advisors, crypto allocations. That means high net worth capital is now entering the market with structure, scale, and long-term planning. This is the turning point. Banks are no longer trying to stop blockchain. They're embedding it into their core operations: payments, settlements, tokenization, and wealth management. This is how real wealth cycles begin. Quietly, slowly, then all at once. And Bank of America isn't alone. Even Vanguard has reversed its stance. For years, Vanguard publicly rejected crypto. That position is now over. Bitcoin, Ethereum, XRP, and Solana ETFs are available directly on Vanguard's platform. That's not speculation, that's fact. One major institution spoke up, and the dominoes started falling. Now everyone is rushing to get positioned first, because history has always rewarded early movers. And this time is different. Why? Because now we have regulatory clarity, bank support, wealth advisor access, ETFs, and institutional infrastructure. Those walls that once blocked capital, they're gone. Now let's talk about liquidity, because liquidity moves markets. This year alone, massive cash injections are entering the economy. Government spending, institutional onboarding, improved global settlement systems, and tokenization are accelerating capital flow. When liquidity increases, markets move, and crypto moves faster than anything else. It trades 24/7, it's globally accessible, and historically it thrives when money supply expands. Now combine consumer liquidity with institutional access. Banks offering crypto services, ETFs simplifying exposure, patents building infrastructure, rules falling into place. This is how major bull cycles are born. And markets always move before public confidence arrives. If everyone believes crypto is safe, legitimate, and here to stay,
The biggest gains are already gone. Smart money moves early. And that brings us to XRP. In just 7 weeks, over 766 million XRP has been locked into XRP ETFs, representing more than $1.5 billion in managed assets. And here's the key detail. BlackRock isn't in yet. Fidelity isn't in yet. State Street isn't in yet. If smaller ETF providers can absorb that much XRP so quickly, imagine what happens when the giants step in. That's called a supply shock. XRP supply is fixed. Institutional demand is rising. Infrastructure is ready. The Federal Reserve has opened the door. Banks are prepared. ETFs are live. Now there's only one real question left. Are you positioned early or late? If you found this valuable, hit the like button, subscribe, and stay tuned. Big moves are coming, and you don't want to miss what's next.